Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hello, everybody. Welcome to the podcast. I always like to date my podcast so people know when the information, even though you can probably see it when you log on. But we're coming to you today on January 15th, 2026. And today's podcast, I think, is super interesting because we're going to really get it from the horse's mouth as far as where we're at with the Foreign Investment in Real Property Tax Act, or FIRPTA, kind of some real life, what's working, what's not working. At the Wolf Group, we regularly deal with people that have FIRPTA withholding tax issues, mostly in the realm of selling real property, primary residences, rental properties. We do see sometimes, and I'm sure, Dave, I'm not sure if you've ever seen this before, but we do see kind of sometimes backup withholding issues on Form 8288C that come up with sale of partnership interests. For the focus of this podcast, we're just going to be talking about FIRPTA for individuals. And I've got Dave Roche here from KVS Title. Dave, tell us a little bit about yourself. Tell us a little bit about your company, and then I'm going to get into some questions for you.
All right. Sounds good. First of all, thank you for having me. It's a pleasure to be here. So KVS Title is a title company in the Metro DC area. We handle roughly 4,000 transactions a year, mostly residential. We do have a commercial department, which I am the lead attorney in. On that side, we don't see FIRPTA so much. So FIRPTA is mostly a residential transaction kind of problem or issue. KVS has been in operation for a couple of decades almost. I've been at KVS for 14 years. I've been in the business for 23 plus years. My experience with FIRPTA, before actually coming to KVS, I probably handled about 10 FIRPTA transactions in total over, a 10-year period. In the last 14 years, I've handled maybe 10 every 2 months.
Wow.
I think, roughly some years, when you sort of break it down, I think it's on average about 5 a month. And we do that because obviously in this area, we're dealing with a lot of different quasi-international agencies or entities, World Bank, IMF. So we have a lot of clients selling property who've worked for those agencies. And so over the last 14 years, I've become sort of accustomed. And a colleague of mine, Gina Raymond, who also works in my office, we handle pretty much every FIRPTA-related matter, every phone call, every transaction. We make sure all the documents are filed properly, depending on the particular forms that are going to be filed for that transaction. And we answer all the questions. So to try to make everybody feel a little bit better about the fact that usually 15% of their amount realized or, sales proceeds really are being held or withheld as part of the transaction. So, that's where we are. That's where we start. KVS, I think, within the industry is probably one of the more informed companies, only because we've sort of, learned by being thrown into the fire.
Yeah,
so to speak.
You've seen every iteration under the sun. You know what works and what doesn't. And
Yep.
It's one of the first questions I always ask when someone says I was just informed. Normally they're shocked, right? They come to me. They're exactly what you said, Dave. They're a G1 or a G4 visa holder working for World Bank, IMF, IDB, IFPRI, one of the 50 different international organizations in the DC, Maryland, Virginia area. They did not realize FIRPTA even existed. They talk to me and they first want to know, is it true? Is it real? Like, I feel like someone's taking me for a loop here. And I'm like, unfortunately, it is true. FIRPTA was created in the Jimmy Carter administration. So I'm going to date myself. I was actually alive or in being at the point in time when the law was passed in 1980. But, it was a strong response to, in the 70s, there were a lot of foreign or non-resident individuals owning U.S. real property, selling that real property and not paying tax. And so when you're required to, there's in certain circumstances, non-residents don't pay capital gains tax. That's on non-effectively connected income, like sales stock or whatever it is. Assuming they're outside the United States. With G4s, there's a little bit of a different rule there. But when you're selling real property, you got to pay the capital gains tax. And so there was no real mechanism to force the reporting of that. And that's where FIRPTA comes in. And as you said, it is a withholding tax. It started out at 10% withholding under the Carter administration, and then was upped to 15% under the Obama administration. And so inevitably, Dave and his folks, KVS and a lot of other title companies, have the awesome responsibility to not only inform but to explain and to try to make people understand how it works. So let's run through a hypothetical here, Dave. Let's say I'm a G4 visa holder and I'm going to be staying in the United States. I'm going to continue to work for the World Bank, but I've decided to sell my primary residence. I've lived in it for 2 out of the last 5 years. I'm single. I only have about $200,000 of appreciation. So, I'm probably not going to have any capital gains tax due. And I'm selling the property for $1 million to an individual person. And what are you going to tell me when I walk in to about that transaction?
Well, it's interesting because, over the years, I've basically over time, it's almost like writing a book. I've come up with an email. It's essentially the same because, you want to soften the blow for people. You want to make sure they understand this is a withholding. You in that scenario, you're probably not going to owe any tax, but if you happen to owe taxes, those taxes will be taken out of that withholding, and you'll probably receive some mechanism for a refund or some measure of a refund. And that's usually how I approach it. It's the first thing I say is, look, this is a withholding, which means you may, because you never know, get a portion of that back as part of this transaction. Now let's go through the steps and your options.
Right.
And the first thing we present is obviously the first thing we tell them is the amount. And as a sidebar, I still get responses because it's such a shock. Some realtors are not really familiar with it. So it's not brought up. Although we're trying to educate realtors on that subject more and more every day. But what happens often is, you'll get the inevitable response. Well, it doesn't apply to me. And here's why. Especially with G4 visas because of their exemption. And I think that's actually a really important point. People, I think, tend to naturally confuse the exemption of paying income taxes on their G4 income versus the exception for FIRPTA or any exceptions applicable to FIRPTA. So once we get through that hurdle, and I explain, well, no, it does apply to you based on this reasoning. We'll go through the options, and there's essentially two options. You either file for the 8288 form and the 8288A form, which means we're going to remit that 10 or 15% to the IRS within 20 days of the settlement happening. The other option is the 8288B form, where we would actually hold the withholding in escrow until the IRS issues what's called a withholding certificate. And Mishkin, you know how that's been going, obviously. So those are the options. Usually, the way I present it to people is, and I think this is changing. And, from my perspective, the title company, if we're doing a lot of these transactions, I'm going to go to Mishkin. I'm going to go to other CPAs who understand this niche and say, okay, where are we with 8288B forms? I mean, is it worth filing at all? And I will say, in the last year, well, the delays are up to 2 years in terms of getting a withholding certificate. But I have actually had a couple of people in the last year, over the spring actually, who just didn't want their money going to the IRS. So they wanted us to hold it in escrow. And we did actually receive a withholding certificate within 3 months on one occasion.
Wow.
Yeah.
Wow.
That said, 3 months and 4 months in two different cases. That said, I'm still holding an escrow or two escrows from 2024 for a withholding certificate. Oof. So, it comes down to explaining to the parties, these are the options. We're either going to remit the funds to the IRS and we're going to file the 8288 and the 8288A forms along with remitting those funds to the IRS. And then you as the seller can then file for a return in the following year. Or we're going to hold the escrow. And if we hold the escrow, we have to wait for that withholding certificate, whether it's 2 months or 2 years. And that money will be held in escrow until we receive that certificate. So it's a balance. I think the important part here is just being very clear with people and giving them the facts and letting them decide what they want to do. But also at this point, based on your recommendations and some others, I make it a point to also add now, I don't recommend an 8288B form, just based on the time.
Yeah, we haven't offered that service since I think 2021, or maybe even earlier than that. Maybe it's 2020. We decided to pull the plug on it. And here's my reasoning for this. That I want everyone to understand this. There is no such thing as a FIRPTA unit at the IRS. This is my understanding. It's that part of the IRS business unit, so it's LB and I. And what happens, my understanding is that there is an assigned staff, which is not many people, and probably even less now, given the people that have been laid off and retired and forced out of the IRS. But there's maybe a handful of folks that will go in and check those applications once or twice a week. And that's why it's really weird, Dave, where you have 4 clients, some of which submitted later than other clients, and they just happen to get theirs back fast. I think it's just the luck of the draw. That person just happened to pick that file. I was just sitting on the top of the stack that one day, and they maybe just picked it up. And, oh, okay, yeah, this one's straightforward, but let's get it out. Also, I think if there's turnover there and then someone new has to learn that job, there's going to be another delay in there. Plus, we have the shutdown from October 1st to November 12th. That's now impacting, and we'll talk about I-10 applications, but FIRPTA withholding 8288Bs, I-10s, 8802s for the residency certificates. All those have kind of come to a screeching halt due to that shutdown because there's a backlog that they're trying to get over. But so it's all very random. There's no, path that is, in my opinion, very, that's laid out that makes it easy to understand. Also, there's no real way to check on it. I mean, I've got clients when we did this, the reason why we stopped doing it is because clients would email us every week. What's the update? Can you contact the IRS? Can you listen to this? No, there's no one at the IRS to contact. Like I could call in, sure, and talk to a practitioner party hotline, but they're just going to tell me to wait another, 4 weeks, 6 weeks, and like you said, by law, once they go that route, you have to hold that money in escrow until you hear back from the IRS. There is no forcing the hand. There's no releasing it. It is just what it is. And so my advice, at least for the ongoing future, is to do the 8288A, allow the withholding to occur. We'll talk about that as well too here in a minute. But my last comment would be, and I've told this to people at the IRS because I go to the IRS conferences every year, and then they do send someone that does talk about FIRPTA. And I tell them, I say, look, in the Virginia, Maryland, DC area, there are so many A1s and G4s and other types of non-exempt employees that are non-residents for tax purposes, but they live here. And I don't understand why you just don't set up a walk-in clinic or a walk-in office where people can go in and do the 8288B directly with people at the IRS. And you just have to open it up maybe like once a week or twice a week. It's minimal staffing, and I think you would resolve this issue. Because this is where, in my opinion, the majority of the applications are probably coming from this area.
That would be a blessing. That would be an absolute blessing. And just to add to your point, I don't think there's, from my understanding anyway, the people who are handling FIRPTA applications or the B forms, they're not up to date with technology by any means. We're still having the fax documentation or even letters of request. It's such an antiquated system. So I agree. I wouldn't really recommend it. But it is interesting. You do have an occasional person who says, no, I do not want my money with the IRS. So that's where it comes into play, I guess.
Let me ask you this, Dave. So let me change my hypothetical. So now let's say I'm married and I'm same facts as what I just told you. So I'm selling a house for $1 million, G4. I've got a G4 spouse. I have a social because I'm the primary G4. They give me a social, but my spouse does not. My spouse never applied for an EAD, and they need an I-10 because they don't have a taxpayer identification number.
Right.
How do you approach that when they come in and they're, a month or more from selling their house? What's your formula there for dealing with that?
So what we do, and the added bonus or added problem to that is, at the end of the year, every title company we're submitting 1099 forms to the IRS to show that the sale has taken place. So when we do that, or if we don't do that, we're penalized for each form that's not submitted.
Right.
So at this point, after some discussions, if somebody doesn't have an ITIN, and I'm certainly open to other suggestions, what we do is I give them the information on how to file the ITIN right away, and we'll actually hold that $250, or $300 penalty until we receive it.
Oh, wow. Okay.
So and the problem with that is you obviously have to file an amended A288A form, because you're sending it in on the advice of a CPA. You're sending it in as pending. So instead of where you would actually include the ITIN, you're writing the word pending or in process.
And do you guys send in the ITIN application with the pending, like so you do the 8288A and then you put the W7 and all the stuff behind it?
Yeah. Whether anybody looks at it or throws it away, I don't know. But
I think it's great. I think you should absolutely do that. That's not in the IRS procedure. So my understanding of the IRS procedure is you just put, you leave it blank. Okay, and then this is so ridiculous that this is the way they like it. You leave it blank, and then they check and they see they don't have a social and they don't have an ITIN. Then they send a letter back saying, here's the process for doing your ITIN through FIRPTA. And then you respond with the W7 and all the information to that. But the odds of getting that letter response back, in a very quick fashion and then sending it back in, so I love the idea of sending in the W7 with all the stuff with the 8288A. And if they send a letter back saying, we didn't look at it, sorry, you got to resend it back in, then you resend it back in again. For best practices, though, because I got this tip from the IRS at the last conference I went to, they were saying that for the ITIN applications, doing it like having our firm, for example, do a W7 and then attaching the documents and giving it to you guys, the failure rate is like 80%. Whereas if it goes through a certified acceptance agent, which we're not, we don't have anyone at the Wolf Group. The last one that was a certified acceptance agent was Len Wolf, who's now retired. So we haven't re-upped to have someone volunteer to do that. But you do a certified acceptance agent, have them do their entire process, and then I think they would give, once the documents have passed through them and they've certified it, then they give it to you guys. And I think the failure rate was only 14%. It was crazy.
Really? Okay.
The differential of the failure rates with the IRS for those applications. And then the great thing is that if the application is rejected or fails with the 8288A, the certified acceptance agent can actually contact the IRS. There's a special hotline just for them to then work on that piece to make the whole thing work with FIRPTA. So it's kind of like this little end around to be able to coordinate with the IRS on that.
Okay, that's going to be my next step next time that happens.
Absolutely. You may need to get a certified acceptance agent, in house or something like that. But that's a conundrum. We see that all the time. I'm always asking, and people always get confused. So many G4s will be like, I was told I need an ITIN. And I'm like, well, do you have a social? Yeah. I'm like, that is your that is your ITIN. So just to be clear for everyone listening, if you have a social security number, you are not eligible for an ITIN, nor do you need an ITIN, okay? Because that is your taxpayer identification number. And ITIN is the individual taxpayer identification number. Some people call it international taxpayer identification number. That's not what it is. Individual taxpayer identification number is for anyone that does not have a social and cannot be eligible for a social. So sometimes you have to be real careful, because if the G4 or the A1 or A2 is eligible for a social, they'll get rejected and they won't understand, why did I get rejected? Well, you're eligible for a social somehow, and you got to go back to your immigration attorney and you got to get your social through them. So that's the secret sauce for how you deal with that issue, at least from my knowledge. Okay, let me throw you for a different loop here. So let's say that you do the 8288B and you withhold all that stuff and you get that sent down and you don't hear back. So the two that you haven't heard back from, what do you tell them about filing their tax returns when they say, well, I haven't got my money back, what should I do? What do you tell them about doing their tax returns for the year in which they sold the property?
Yeah, this is where I come to you. This is where I send you an email. we recommend a CPA to reach out to. I mean, I think it's first of all, it's an unfair process because they're waiting so long. And as I understand it, there may be penalties associated with the taxes that come due and they don't even know what taxes are due yet.
Yeah.
So, I try to explain all that to the party and make sure they understand how important it is to reach out to a CPA and just have somebody working, to get whatever needs to be filed at that time filed right away.
Let's go to another hypothetical. Let's say I'm selling the property for $750,000, so not $1 million, and I'm selling it to an individual person, because I think a lot of title companies that are not you guys, that are not in the Maryland, DC area, don't understand that you could drop the withholding down to 10%. They just see somewhere that it's got to be 15, and they don't realize that there's an exception. How do you deal with, what's the internal process, or what's the real life process on that? What do you require to be done to drop down from 15 to 10 in the fund?
Okay, so first thing I do is I'll take a look at the contract, see what the contract says. Do we have a loan? Does it reference or recite that the property is going to be a principal residence, which would drop it down to that 10%. In addition to the contract, we'll ask the party directly, do you plan on to live in the residence? Now you can get into, do you plan to live there 50% of the time? And do you have any family members, but ultimately the question is, do you plan to reside? Once we have that confirmation, we have an affidavit executed as part of settlement. Sometimes before settlement, if, for some reason that escapes me now, it might be done before settlement, but typically at settlement, we'll have an affidavit executed that states the purchaser does plan to reside in the residence as 50% of the time, at least, as a primary resident. So with that, we're in a position under $1 million. We know that the party's going to reside, or at least they've sworn to reside. Then we can reduce it to 10%.
Okay.
So yeah, and usually I'll set that up by email. So essentially, just reaching out to the party. I think the biggest thing title companies might struggle with is just constantly conversing with the party, because there's so many little nuances, so many little steps with FIRPTA. You just have to know exactly little bits and pieces here of what they're doing and what their plans are.
Do you guys use like an internal checklist to mark that stuff off? Yeah. I think so. Okay. Let me throw you for a different loop. I'm going back to my hypothetical, and doesn't matter if you're selling it for 750 or $1 million, but let's just say I'm a US citizen and I'm married to a G4.
Yeah.
And we're selling it for $1 million. Now what? Am I attributable as a US citizen to have withholding on me too? Or how does that work?
Well, if you're the first thing I'll do is look at the deed to ensure that you hold title as, typically it's tenants by the entirety, husband and wife. So if it's like that, we're gonna treat it as 50-50 split. And we do actually file for that spouse's portion that is not a US citizen.
Right.
Yeah. So essentially at a, call it $800,000 property, we're gonna file based on 400,000 typically.
Right. And then you do 10%. If they qualify for the reduced, they do 10% of 400.
Right. Yeah.
And what is the other types of ways that people can hold property that would make it different? Is that tenants in common, or
Tenants in common?
Yeah. So in that case, like, let's just say it's $1 million property, we're tenants in common. I, as spouse one, have decided somehow we've traced it where I own 90 and then my G4 owns 10. That would then change the whole matrix.
Yeah. We would go by what the deed says in terms of the ownership interest, because I think if you look at the definition of the amount realized, I think that would fall to that 900,000 or 90%.
Okay.
Where it gets real tricky though is when you have family members, 2 of them are U.S. citizens, one's not. You have a $900,000, we'll call it, $860,000 property. So 1/3 of that is under that $300,000 threshold. I'm not sure if you want to talk about that a little bit or not, but there's a threshold for $300,000 that has to be above that, as long as the party's gonna live in the property. So their interest is really, say, $270,000. But my understanding and the approach we take is we still need to file the 8288 based on that $270,000. Yeah,
no, I would agree with that. So what Dave's talking about is that there are 2 different thresholds for exceptions to the 15%. One of which is, and this happened under Obama. Obama changed that. That's when we have the implementation of the PATH Act, and then Internal Revenue Codes 1445 was updated. But basically, the 2 exceptions are that if the sales price is less than $1 million, as Dave just illustrated, and your buyer kind of agrees to live in the property, I think it's 50% of the time for the next 2 years as their primary residence, a document that they sign as an affidavit, I believe, and then it doesn't go to anywhere. My understanding that doesn't go to the IRS. It's just kind of for the file. Yeah. Then you drop the withholding down to 10. Now, there's a second one that if the sales price is less than 300, the withholding is 0. But in this wacky scenario where you've got, like you said, 3 people and now you're dividing it out, is it really, because the ultimate sales price is more than 300, but the portion in which you're withholding amount on is less. And so I think a good conservative reading of that is, you still withhold, you still send it in. I like that result. And I think that's what FIRPTA was intended for. That's the intent of the act there. So I don't see any issues with that at all. Let me throw you for another hypothetical here. G4, and I've got a revocable trust in which the house has been quitclaimed into. Now what?
Oh, we love these. Well, I think we typically with G4, revocable trust, you're gonna have the ITIN or the Social Security number as the TIN, tax identification number, for the trust itself. We take the position that we have to withhold. Based on that.
Yeah, I get a lot of folks that will come to me and say, well, but it's not my house, it's in that revocable trust. And what I always tell them is, my understanding, and again, I'm not a super hyper estate planning attorney here. I'm just your local CPA, but revocable trusts really don't really exist until death or incapacitation. That's really when they come into play, and they're transparent in nature. So everything that the trust owns, you own until one of those two events happens, and so it's not going to subvert or block FIRPTA from occurring. There are other strategies. We have talked to different G4s about, maybe they don't qualify for the 121 exclusion. They haven't lived in the property for 2 out of the last 5 years. Maybe it's been a rental for a really long time or something. And, we talk about potentially contributing the property to a C corporation and then having the C corporation sell and liquidate, so there's some theoretical end arounds that you can do. Maybe they're more convoluted than they need to be, but for the most part, I don't think that a revocable trust is going to kind of get you there and insulate you from the issues of FIRPTA. Do you deal with a lot of non-residents that live outside the United States, maybe G4s that were in the US living there for a while and then they've moved out? How do you deal with those issues of them living outside the US?
We do, and not really, unfortunately. I mean, in the end, we do have a system that works, I think. So not treated so much differently than any other G4. So once we know FIRPTA is going to apply and we do need to withhold, part of that checklist system is having each party add information specifically that we're going to need for those applications. One of those is not just the forwarding address, but also what address do you want to use? Do you have somebody in the US whose address you want to use? Because that's going to be easier. From my experience, it's been easier to actually receive mail from the IRS, especially on FIRPTA, when there's a party in the US. And I think that might be the big or biggest issue when it comes to G4s that are living in Spain or wherever. And I say Spain, that's just been my last example of that. But
So a couple comments on that. If you look on the 8288A form on the bottom left, there's a mailing address or forwarding address, I believe, section. And I tell people, think through that carefully, because especially here on January 15th, 2026, that the tariffs, and I'm not getting political here, but the tariffs create problems with mail, both going in and out of the US. I have a lot of people giving up green cards or trying to mail stuff into the IRS from outside the US. And they keep telling me, well, the mail is getting stopped for tariff check. They think something's in there that a tariff may apply to, and it's being held up and it's not getting where it needs to go. And the timeline is being, dragged out, or even the mail is being returned or the mail is being thrown away. And, it's not getting to where it needs to go. That's inbound into the US. But there are also problems going outbound of the US into a foreign country. And so I agree. I think that if you are actually going to be outside of the US, talk to a friend, talk to a colleague. People have always said, well, I'll just have them mail it to the Wolf Group. And I'm like, we're not taking responsibility for that. You got to have that. That's your responsibility to get the stamped copy of the 8288A mailed to somewhere that is secure, that you can get it at. That stamped copy, though, and I've mentioned this and when we did our webinar back in 2022, and I'll reiterate it to everyone listening to the podcast today, that is your golden ticket. That is the Willy Wonka golden ticket. Now, there are ways to get your money back without that. There's an elongated process that we use where we get a copy of the canceled check and, copies of the forms that were filed, and we pray and we call in and we hope it'll work. But really, the fastest, easiest way to do it that I've seen is that you get the stamped copy of the 8288A. We attach that to the tax return. We like to file those. Now, the non-resident returns, normally the IRS always has those last for e-filing. So it's always like the second or third week in February, but we normally have, a ton of G4s that need to file those ready to go by that point in time. We attach the stamped copies of the 8288As, we get those in. And then our observation for the last 2 tax seasons is that the refunds are coming really fast. We're seeing those in April, we're seeing those in May. But the kicker here is that you got to have a US bank account because the Treasury is no longer sending checks. And if you don't have a US bank account, then you're going to get some kind of digital card, or even here's where we're at. You may even get something with Bitcoin. That there's a Bitcoin reserve with the federal government now. So you may get something exotic back from the IRS if you don't have a US bank account. So I always tell all my G4s, my non-residents, that US bank account is gold. You got to have that because you'll need that for direct deposit with dealing with the IRS moving forward. Really, really, really important. Any comments there from you on that, Dave?
Yeah. First, I'll say on the U.S. bank account, it's important on the title side too, in terms of disbursement. There's obviously added layers. So when we do have, when we used to have B forms, or even if we're just refunding the foreign individual who's, was subject, we may have remitted everything to the IRS, but there's additional funds that have to go to it adds problems just from a security or safety standpoint in dispersing to funds overseas. So that U.S. bank account is so important for multiple reasons. I was
going to add, and so in your space, when someone gets their disbursement of their funds, maybe it's post FIRPTA, so you've done the withholding, you've mailed it down, then you've got the funds afterwards. Are you saying that you're having issues then? You'd prefer that money to go to a U.S. bank account versus a foreign account offshore? That's easier to go for you? Are there?
Yeah, it's just added layers from through our bank, what we have to go through. And and just internally with most title companies now, because of fraud so rampant, we have internal checks and balances, and that's one of those things where when you look, is this a foreign bank account? Well, now we have to jump through this hurdle. The other point I was going to make is you were talking about the applications and the copies. So one thing we do, and what I try to do, we do as part of that checklist, and the last thing, once we remit funds, we'll send copies to the party or to you. I think, there's been occasions where you may have emailed me, asked me for copies, but and what we want to provide is both the 8288, the 8288A. In addition to that, a copy of the canceled check, if it's available at that point. Usually takes about a month or so after it's been deposited. And on occasion, the IRS doesn't always deposit the checks right away. And then proof of delivery. So,
okay.
Yeah.
That's a good one. That's a great one.
Yeah, that's come in handy, I think maybe once or twice.
Yeah. And so sometimes when you don't, because it can happen. Again, this is like Dave said, this is a very antiquated system. They're mailing stuff. I still believe I'm hopeful again that they'll create a walk-in office, or even better yet, that you'll get your stamped 8288A through your IRS online account. Like they would just pop it up in there as a kind of like going into Morgan Stanley and getting your 1099 and just downloading that. I'm hopeful that the IRS will have that option one day where some of this stuff, will just pop up in there as a download. Like, oh, there's my 8288A, and you just you get it that way. That would be mind blowing that we'd get to that. But yeah, that's a really important thing. One last question for you, and then certainly if you have any additional comments, happy to hear those, and then we'll let you go. But a lot of times when I talk to people that are not in the Maryland, Virginia, DC area, so I'll talk to people doing transactions in Alabama or Minnesota or wherever, and they'll say, well, I'm the seller, I'm a non-resident, maybe I'm a G4, but I'm working remotely in the state or whatever. And, so I'm one of the few non-residents those title companies will ever see. And the title company will tell me that I need to give them the 8288 and the 8288A. And I kind of have to educate them and say, well, let me just be clear with you here. it's the buyer's responsibility. The buyer is the withholding agent, and the title company is kind of acting for them in that capacity. It's not, as the seller, it's not your responsibility to withhold. It's the buyer's. And actually, the money, the withholding tax, when you send the 8288A down, it goes into the buyer's account. It doesn't go into the seller's account. A lot of people are freaked out about that.
Yeah.
Like there's a hold though that blocks the buyer from being able to access those funds. But do you guys educate the buyer on their responsibility? Do you have to do a whole kind of, does that freak people out at any point in time?
On occasion, it does. Yes, absolutely. Yeah. And, you try to have to soften the blow for them and let them know that, this is something we do on a regular basis. We're doing our best to make sure it goes right. Granted, within the industry, there's sometimes you get a letter that says the check hasn't cleared. Yeah, you have a copy of the canceled, the voided check. So added, over the years, you kind of hit those type of issues and you learn how to deal with them.
Yeah.
So it makes buyers more comfortable knowing that there's an expertise behind it or an experience. I've had a couple of title companies as well who have refused to sort of follow the path, or, one or two who were not going to file the 8288 on behalf of the buyer even. So, the mechanism there is just to sort of walk people through it. We're not doing the closing, but I'm happy to sort of show you what you need to do or recommend a CPA to reach out to.
Yeah, and prepare those forms, and the buyer remits the money. But yeah, it's a super fascinating area. And
yeah,
gosh, okay. Well, any other comments that you want to leave the audience with? Anything else you want them to know about FIRPTA? It's Dave. So just so everyone knows, I'm a fan of Dave, a fan of KVS Title. Anytime I hear, someone says, well, yeah, KVS is doing the closing, I'm like, oh, thank God. Because I just know that it's going to be done really well, and that we won't have anything to really worry about. But any other, tips, best practices you want to leave people with before we get out?
Well, first of all, thank you. I appreciate that. Yeah, how FIRPTA impacts the title aspect of the transaction, the settlement statement, the funds that you're getting back. Always feel free to reach out, to your title company, to me directly if you're in the DMV area and your property is, and just, we can go over the numbers and let you know what to expect well in advance, even estimates. And I think that helps people along with the process so they're not shocked at the end. I'm obviously here to help any way we can and answer any questions. So.
And Dave, just so you guys know, I'm 1 year behind Dave, so I've only been doing this for 22 years. But my experience in dealing with Dave, we've been dealing with Dave and KVS for a very long time, and he's very responsive. He's happy to help. I think I just sent him one the other day, and the person I think was missing an I-10, and then they came back like, oh yeah, Dave's we'll take care of it. We'll get it done. And I was like, great, that's going to be a good outcome, long term for them. But very responsive. They will definitely help out. Like you said, trying to educate, as many people as possible, just like Ed Wolf does. We're not trying to just hoard the information for ourselves. We want to make this process smoother. We see it's a very old draconian path, and I think I speak for Dave and maybe everyone else that deals with this, that we'd love to see it be done differently and easier and faster. And I think that should be a goal, just on fiscal policy, make movement of money and goods and services move faster. I think that's what everyone wants. So hopefully, maybe if there's some folks from the IRS listening to this, and some policy folks, maybe some of the people from the tax writing committees, hey, we'd love to see some change here. So if you can get that done, that would be great. But Dave, thank you so much for coming on.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.